Hello everyone, my name is Thomas Mineart and I'm an agent at the Iowa Realty Jordan Grove office in West Des Moines, Iowa. And today I wanted to give you 5 things you need to know about down payments when you're purchasing a home. The first thing that you should know is actually a shout out to Kevin Garnett because anything is possible. So when I say anything is possible, when it comes to down payments, what I mean is if you want to go zero down, there are options for that. There's things like the USDA loan or the VA loan, and then there are conventional products as well if you go shopping that can meet your criteria as well. The second thing you should know is what the normal amount to put down. I say this because a lot of home buyers I talk to have the misconception that normally people put 20% down, which is not really the normal anymore. The average amount that a buyer typically puts down is 12%, and then the average for a first time home buyer is actually 6%. And that is according to the National Association of Realtors. That's a study that they did in 2019. 20% down is the minimum amount that you have to put down if you want to avoid paying private mortgage insurance, and that is where the 20% misconception seems to have started. And the third and fourth things I want you to know are what are the advantages of a low down payment, and then what are the advantages of a high down payment. The advantages of a low down payment are things like you have more cash in pocket to do improvements right away when you move into the house, or you just have an emergency fund right away when you move into the house in case anything comes up right away. A high down payment has some different advantages. You would have a lower monthly payment over the whole life of the loan. You would end up paying less interest, and it could also give you the option to have a shorter term. The fifth thing is to know that your down payment is not the only cash that you will need to bring to the table to close on the property. When you close on a property, you also have to pay what are called closing costs. Closing costs are made up of all the fees that come up during the transaction that are a part of purchasing the home and acquiring the mortgage. Things like prepaids on insurance, appraisal fees, and property taxes are all wrapped up in closing costs. Your lender can often estimate what your closing costs are, and closing costs can also sometimes be negotiated and paid for by the seller. I hope that helps you understand more about down payments, and please do not be afraid to reach out to me with any questions. Have a good day.